It has been a tough few weeks for Nike. On the last Friday in June, its stock plunged 20%, the worst day since Nike's IPO in 1980. That came a day after the company cut its full-year guidance, warned it expects sales to drop 10% in the current quarter. This week, a Bloomberg report said the company is bringing back a former senior executive to oversee struggling retail partnerships. Joining us now to talk about the state of the sneaker and athletic giant, Adrienne Yee, the retail analyst covering Nike at Barclays. Adrienne joined multiple analysts in downgrading Nike's stock after the fourth quarter report. Adrienne, great to have you with us. The stock is like $10 away from pandemic lows. Things look that bad at this point. The bulls will say Nike is already working to improve the innovation. They're going to have a bunch of new products in the pipeline. Why did you get so downbeat on the stock by downgrading it?
We downgraded the stock, and thanks for having me on, because the level of uncertainty in running the business from a strategic standpoint over the next, let's call it 12 to 24 months, has just increased. We are pleased that they are engaging in all this innovation and they have this pipeline, but they launched a bunch of new products, about 30 new products at the Paris Innovation Summit at the end of June, and none of those are proven in the marketplace. So there's so many moving parts here that are going on. In the early part, about 4 years ago, they wanted to move more to DTC. They did that. They're now retrenching on that. DTC was down 8%. 8%. And really, the brand health relies in that retail side of the business. So we have a lot of question marks about whether the demand will be there when they actually launch these untested products.
You said 12 to 24 months. So this is a show-me story for the next potentially 2 years?
100%. So remember, think about the branded manufacturers. They are 2 degrees removed from the end consumer demand, from reading demand. Mm-hmm. So this product that is coming in the pipeline over the next 6 months, right, will be then sold into the wholesale marketplace early 2025. The demand read on that, right, will actually be sort of mid-2025 before we find out whether all this new innovation is actually driving the business. At the same time, they are taking their biggest franchises, Air Force One, Air Jordan 1, so AJ1, and the Dunk, and they are what we call franchise managing them, meaning that they're taking them out of the marketplace. That is a very, very dangerous thing to do. You know, when we think about kind of demand and reading demand, it would seem that they are using the outputs as inputs into the system.
How much of the situation Nike is in right now is their lack of innovation, not enough good product out there that consumers want, versus the inroads that Hoka and On are making?
So what I would say is Nike was uniquely hurt by the Vietnam shutdown, in the production shutdowns in late 21. They did about half of their footwear manufacturing there, and they were sort of blanked out from that manufacturing for probably a good 6 weeks, right? And then it was like a ramp, right, to get back. So during this period of time, we had kind of the nascent, right, Hoka and On, that came to the market in running with a new form factor, a high rise, right, wide sole, lots of colors. They weren't able to actually get back into this innovation pipeline until May of 2022. And remember, greenfield innovation takes about 3 years. So it kind of was a rush to market, and they were able to come out with like Peg 41, Air Max DN, right, this season. We're seeing a lot more of that run innovation in the back half of the year, but it's kind of late, right? We actually think we are going back to a flat bottom casual, the Adidas Samba, right, with this kind of new silhouette shift that's going on. We actually think Air Force One is going to be back in vogue.
So I guess you think the Olympics is not going to be much of a catalyst here. I'm wondering, when you're say that, all the problems stem from the Vietnam shutdown, is this looking back, we should have known that Nike would have this innovation dearth because of that?
There were so many things going on. And so it was that, and then it was the supply chain. And then all the product landed in like August of 22. They then, what I call, stuffed the channel, right, in late 22. Right. And all of 23 was cleaning up all of these mistakes. So it's not that any of these things could have been known. It's just while that was happening, the easiest places to take margin back or to regain margin are going to be in your innovation and your research and development and in your demand creation.
Right.
And those two are the lifeblood of future growth in sales.